As we were even kind of teeing up this discussion, where is the recession? Leading economic indicators have fallen over each of the last 14 months, signaling with flashing red lights that economic deterioration is on the horizon. Yet inflation has fallen, labor remained resilient, and the market is rallying. So are fears of recession overblown? We're bringing back in Victoria Fernandez, Crossmark Global Investments Chief Market Strategist. So Victoria, when we think about the mentions that we had seen of recession in the prior earnings season, really kicked off by some of the bank executives here. I've been doing a Command F or Control F through some of the releases thus far, and I haven't seen a ton of mentions of recession. Perhaps that'll come forward in some of the call transcripts that are taking place. But it also seems like companies are still investing heavily, and if any area that they are, AI has been one that has continued to be kind of that through line talking point. So what is keeping a recession at bay right now? Is it AI alone, or is it something else out there?
Yeah, I don't think we can say it's AI alone, but I will say that when we look at the breadth of the market and where that was a couple months ago versus where we are now, we've seen some really strong improvement there, even though it's still those same top 7, top 8 names, however you want to categorize them, that are leading the market and that are responsible for the majority of the gains that we've seen. The breadth is starting to do better. And for us, that's a positive sign. Again, we're still bearish on the market because of all of the other red flags that are out there, but things are starting to look a little bit better. You've seen small caps do a little bit better. So there is a sense of optimism there that perhaps things could start to improve a little bit. I think that's a very intermediate term view. If we look longer term, I think there are these elements that are no longer going to be propping up the economy. So much liquidity, Brad, has been put into the economy over the last year that has really propped things up and I think has masked some of these elements that we typically see, these recession indicators, has masked that and has buffered the effects of that, along with the fact that our economy is different than we were back in '08 and '09. The Fed raising rates does not have the same tightening effect on the consumer and on businesses that it did back then because so many people have locked in lower rate loans, they're fixed rate loans. We don't have near the exposure to adjustable rates as we had a few years ago or as other countries do. So structurally, things are a little bit different. We've had the Fed step in immediately after the banking crisis. We've had fiscal stimulus that I mentioned a moment ago. We've had stimulus for the consumer. So you've had these buffers that have kept us from going into the recession that I think ordinarily we would. How long do those buffers last? I think that's the key as to when we see a recession come and how strong or how weak that recession will be.
One thing that we haven't talked as much about in this conversation is the AI piece of all of this and how much that's going to contribute to growth or not. Do you think the expectations for that are really high going into this earnings season?
They definitely were last quarter and heading into this season. I mean, you just had to mention AI and it seemed like your stock took a bounce, right, Julie? So are we going to see that again? I think now investors are going to be looking to say, okay, great. I understand that AI can be beneficial to your company. I understand that this can be something that will prove over the longer term to be a boost to revenues and to what you're doing. But what are the costs of this going to be? We haven't heard too much about that. What is going to be the investment cost to get AI to monetize for these companies? I'm hoping we hear more of that this quarter. It may be next quarter that people start to dig into that a little bit more. But I think there's a question that hasn't truly been addressed. And yes, it's great, even though I'm going to admit maybe it kind of tells my age and that I'm old school, but it scares me a little bit what all some of these AI things can do. But what is going to be the cost of this in terms of jobs, in terms of infrastructure build for them? Is that going to benefit certain companies like cloud businesses? Is it going to hurt labor? These are all questions I don't think we've truly worked through, and it's the things we want to hear going forward and kind of get the rest of the story.